Let's get more on Nvidia. Go back there in the AI trade with the Melius head of technology research, Ben Reitzes. Ben, welcome. Good to have you with us.
Hey, Tyler. Great to be here.
Is what's been going on we sort of touched on it with Karen a moment ago, is what's been going on with Nvidia a kind of expectable phenomenon, something we've seen before? So an investor who is in there for the ride and goes, oh boy, we were down 15% last week. Is this the end of the game here? Should I be out of it? What's going on here?
Well, I think that Nvidia has these moves intra-quarter where people find themselves underweight and they have to catch up, and then it runs, and then there's all sorts of things. This last week, there was a rebalance, and I think a lot of people were playing that, and then it kind of unwound, and it created a big move. But in general, Nvidia has nailed the full stack approach. The only thing that I've experienced like this is, maybe two things. Maybe the Wintel monopoly of the 90s, or duopoly, whatever they were, and then Apple getting the iPhone. And the full stack approach, when people nail it, when a company nails it, is able to generate a disproportionate share of the profits for that sector. And in their case, some people argue it's like all the profits.
Well, that sounds like you're describing the word we used earlier, and that is ecosystem, that They have built it, they own it, it is their game to lose.
That's right. What they did, well, the foresight that they had is unparalleled. They that's why we were kind of laughing when some people asked me, are they being investigated? Like, for what? For foreseeing the biggest tech change ever, and they should be punished? But okay. But what they did is they built a language, a computing language, and an ecosystem that allows you to monetize AI, and obviously they're killing it. And I think that people, this is probably got the most upside of the Mag 7 that we cover, even though we really like Apple and a few others.
Recently, Nvidia stock had its price target raised by Melius Research from $125 to $160, and this hike implies a 30% boost from where the stock is trading as of the time of this video. The analyst behind the call, Ben Reitzes, also maintained his buy rating on the stock. Reitzes then appeared in a CNBC interview to talk about why he raised his price target, as well as why he thinks Nvidia will keep delivering more cash to shareholders. This is something that no other analyst is talking about right now, so keep watching today's video to find out what he had to say and what it means for Nvidia and investors. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
What is, you had a question.
Karen, so he talked about Blackwell, first of all, coming out earlier than people thought, and then also that we will come out every year with a new chip. So in part of that, creating the ecosystem, how long do you think customers will buy that?
I think that what's really amazing about these guys is obviously they're doing all this and then they're innovating on this annual cadence. So developers and their customers, the clouds, can say, hey, I know where they're going. I'm going to budget accordingly and look into the future and know that there's an upgradable cadence. That is so valuable. Even though it's not an enterprise business, Apple does it every year. And that cadence is so reliable and gives you such a pole position. And also they're running, everybody's trying to catch them. And if they're running 150 miles an hour while everybody else is running 100, it's going to be hard to catch these guys.
Melius Research expects Nvidia to continue its dominance in the GPU market. And despite the fact that many companies are now entering this market, the firm thinks that there's no significant competitors out there that could challenge Nvidia's full-stack approach over the next 2 years. According to analyst Ben Reitzes, this outlook is bolstered by the upcoming release of Nvidia's Blackwell and Rubin GPU lines in 2024 and 2025, respectively. The analyst has also raised his estimates for Nvidia's future earnings per share. So, let's get right into the numbers. Hello everyone, and welcome back to Investocracy.
So Ben, sort of piggybacking on that, when you look at the stock, it's got 80 to 85% market share. We've discussed that. When they did the stock split, I had thought they were pulling a rabbit out of a hat that they didn't need to try to take the attention off of mega beats going forward. They wanted to sort of suck up as much oxygen in the room. The retail investor could buy fractional shares. You didn't need to split the stock to be able to do that. In your mind, I know you're bullish, but in your mind, how long before we get to that next hump in the road do they have? Is it a 2-year cycle? How long do they outperform?
Well, we think they continue to outperform, and it's really hard to know quarter to quarter, but we are showing sequential growth. And I think that what we need to see is they continue to beat and raise, at least at some cadence. And that is very doable in a lot of our research that we see. The margins actually, one of the big surprises, margins have been able to stay intact and expand. And that's just staggering. 70% operating margins is rarefied air. Guy, that's why they deserve that high EV to sales. Because anyway, I think that as long as we see that sequential growth, we're going to keep going. One thing we wrote about recently, Steve, is that there's $270 billion in cash these guys are going to generate over the next 3 years. If they add a buyback to this, they don't want to say that because that's something mature companies
I just
do.
got the goosebumps.
Yeah.
Well, that was going to be my question. What are they going to do with all the cash they're going to have?
This could be the thing that answers Steve's question. It's no one's talking about it, and when you do the model we do, it's a cash gusher, and there's just nothing they can do. This government's not going to let them buy anything big. They can't invest that much in R&D. It's just not possible. So we got to get it as shareholders, and that could be the thing, one of the things that helps. And it doesn't mean they're not growing. It's not an insult to buy back stock if you got nothing else. Of
course. Final button here. It's in the 120s now. What's your price target on it?
My price target's 160, and we feel really good about that.
Reitzes expects Nvidia's earnings per share to increase thanks to expected growth in the company, especially in its data center segment. For the fiscal year 2025, which ends in January 2025, EPS estimates have been increased to $2.71 from $2.69, with projected revenue growth of 96% to $119.5 billion, up from the previous forecast of $118.4 billion. This includes an estimated 120% increase in data center revenue to $104.6 billion, an uptick from the earlier prediction of $103.6 billion. Also, looking ahead to fiscal year 2026, the analyst thinks that Nvidia's EPS will hit $3.71, up from a previous estimate of $3.43. This reflects an expected 38% surge in revenue to $164.4 billion, compared to the previously estimated $151.2 billion. Not only that, but data center revenue for the same period is forecasted to grow by 41% to $147.7 billion, which is an increase from the earlier projection of $134.6 billion. The positive trajectory continues into fiscal year 2027, with EPS estimates at $4.47, up from $4.16. Revenue growth for this year is projected at 20%, reaching $196.8 billion, compared to the earlier forecast of $181.8 billion. Meanwhile, the data center segment is expected to see a 21% growth, with revenue potentially hitting $178.7 billion, an increase from the prior estimate of $163.5 billion. Of course, these are extremely bullish estimates for Nvidia, but do they mean that investors should be buying Nvidia shares right now, especially after the recent dip? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Does not derail the company's growth trajectory. It is still and will remain the undisputed leader in the GPU space, a market that he only sees growing from here. He's Daniel Newman, CEO of the Futurum Group. Daniel, welcome. Good to have you with us. Is there anything intrinsically worrisome about a company that basically triples its market value at such a high scale to begin with, from $1 trillion to $3 trillion in such a short period of time? What does it suggest, if anything, about the future trajectory of the stock?
Yeah, you have to look at the trajectory of AI as a whole. You know, when the stock was trading at about 1/10 the value, I said, this is the company to look out for. It had this secular tailwinds that AI is going to deliver to the market. And it was not just selling GPUs, but it's selling the full compute and software stack. And that's so important for people to understand how when you gain a market advantage, and now they have 96, 97% of this GPU space. You heard Jensen on that soundbite talking about having Google and having Amazon and having, every major OEM using its hardware, that this entire trend line, and it's going to flow out to Salesforce, it's going to flow to Microsoft and all its software, and then eventually to the industries. That's what Jensen is saying. That's what investors are betting on. And it's going to be hard for competition. There is no native predator in the wild right now. There's companies trying, but no one can really compete right now with what NVIDIA is doing.
The analyst's comments on Nvidia highlight the company's strong position in the market and the expected continued growth in the coming years, especially within the data center sector. Additionally, the reaffirmed buy rating and price target highlight confidence in the company's future performance and product lineup. And Reitzes isn't the only analyst that's bullish on Nvidia. Ivana Delevska, founder and chief investment officer of Spear Invest, remains optimistic about Nvidia's shares. Moreover, Susquehanna analysts say Nvidia stock could test $160 a share, while Rosenblatt analysts say the stock could rally to $200 with a buy rating. All of this is due to strong demand for its AI chips. But on the other hand, Gil Luria, an analyst with D.A. Davidson, has expressed caution over investing in the company, fearing an AI bubble. Notably, he has a neutral rating on the stock. With this in mind, you might be wondering about how investors should approach Nvidia, and the truth is that Nvidia stock remains a great buy at the current dip, as the AI story shows no signs of cooling, creating big opportunities for the AI market leader. In fact, according to Grandview Research, the global AI boom could grow from about $137 billion in 2022 to more than $1.81 trillion by 2030. And with growing AI demand for data centers also increases substantially. There are forecasts that data center demand will double by 2030, thanks in great part to AI. Furthermore, Goldman Sachs is bullish on the industry, as the investment banking giant estimates that about 47 gigawatts of additional power generation capacity will be needed to accommodate growth. Nvidia is the pioneering force behind AI, and that makes it one of the leading AI stocks to buy for the long haul. The stock is currently trading at around $124, following a 10-for-1 stock split. And with AI demand set to explode, many expect the stock to rally again and hit $1,000 per share once more. The company's earnings have been strong, and they're expected to continue at that pace. In fact, in the company's most recent quarter, Nvidia's quarterly revenue jumped 262% year over year to $26.04 billion. That was well ahead of estimates for $24.65 billion. Additionally, adjusted earnings per share jumped 461% to $6.12, soaring above estimates for $5.50, and even adjusted gross margins of 78.9% were above expectations of 77.2%. Guidance was also strong, which was rare for tech companies this earnings season, as many companies smashed earnings, but had their stocks fall due to bad guidance. For the second quarter, Nvidia's projected revenue of $28 billion is above expectations of $26.6 billion. Also, adjusted gross margins could come in around 75.5%, which is also above estimates for 75.2%. The company's numbers and forecasts are enough reason to be bullish. So, investors who really believe in the future of AI and the Nvidia story should ignore the short-term volatility and load up on more Nvidia shares to hold them for the long term, especially because the stock is currently trading at a discount. But, what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.